All right, guys, what is going on? Oh, let me turn my camera on. All right, where are we? Where are we, dog? Oh, I already turned the sound off so you didn't hear it. But there is Thursday's low. Let's see if we can get to 47. Maybe not. Maybe not. I'm gonna drag my stop. But I want to see if we can get a little bit lower. How low can you go? Or whatever it is. Let's do one more of these. Boom. Oh, I was late on the tweet, chat. I was late on the tweet. That's all your fault. Okay. Anyway, we should be good to go. We should be good to go. You guys ready to learn something today? Yeah. Drop some ones in the chat if you guys are ready to learn. Oh, we don't even have like 20 people on, dude. Oh my God. What are we doing, chat? Where is everybody? Where is everybody at? Hmm? Where is everybody at? Where did everybody go? I don't know. I don't know. Chat is also still open today. What's good? Naruto, Scott, Julius, Mason, Lewis, MJ, Switch 50% off Top Step code. Oh, nice. Capitalist, Marius, Ram, Shaney, AD, HD, H, and everybody else, man. What's good? What's good? What is good? What is good? So, man, we got a lot to talk about, dog. We got a lot to talk about. Now, the indices caught my attention more so ES than NQ, and Dow is just, we're not doing it, bro. But I do like NQ and ES, right? So we'll zoom out a little bit so you kind of get a better understanding of what it is that I was talking about. Okay. I have to throw in the wild tweets in here. I just have to. I can't not, you know what I mean, say stuff. But when I got to the charts today, I slept in. I didn't plan on doing anything today. I was like, yeah, Friday's a good day to sleep in. And it was absolutely a good day to sleep in. So when I got to the chart around, I want to say 10:30, 10:35, I knew we were going to leave these highs open, and I wanted to see what we would do at the low at 920, right? So we didn't get a reversal there. It's like, okay, we're going to go for Thursday's low then. And then, so of course, you know, what do we wait for? A retracement higher. And then we touched back into that. Which is our regular trading hours gap. Still can't get the volume right, chat, today. Okay. So do you guys see that right there? Right there. So then as soon as we started to sell off, I'm like, oh, wait a minute. We left some up candles here too. That's probably going to become accumulation or reaccumulation on the buy side of the curve. We're not going to have a buy side of the curve until we get manipulation. We're not going to have manipulation until we take, drum roll, what? Thursday's low. Bang. Look at that. Trading the sell side of the curve, or at least analyzing the sell side of the curve of a market maker buy model, baby. You know what I mean? You know what I mean, chat? But there's no algorithm, dog. It doesn't exist. What time is that? 12:05, baby. 05. You like that? Do you like that, chat? Actually, we'll put this down here for a second. Look at this. Look at this. 11:50 to 12:10. We don't want that extended. Okay, there's that time window. Right there. Don't need a midline. We'll make this purple because we've been doing that all week. Like with the indicator. Look at that. 10:50. Soon as that rolls around, immediately lower. Retracement. Lower, bang. Thursday's low inside that time window, baby. But there's no algorithm, right? Okay. Look at this. Look at that. If it was like a minute or two earlier, that would have been prime, but I really wasn't focused on tweeting today. I'll tell you that, okay? I really wasn't. But then look at that right after, baby. Imbalance. Perfect. We trade into that. We'll make this red to represent that it's bearish. Midline, right? Look at that. Can't get to the upper half. Bearish. You see how that works? Man. Dude, I'm telling you guys, man. I'm telling you, dude. You don't even know, man. You don't even know. Is this stuff not just absolutely phenomenal or what? Look at that. Look at that. Anyway, this has nothing to do with today's lesson, by the way. It's just what I saw. I wanted to go over the dollar and euro, and well, indices does play a part in that, I guess. But I titled the stream today, one of the key elements to high probability trading. I think it's supposed to be. It's cut off there on my end. Yeah, it's spooky, Mason. It's absolutely spooky. I want to get 47. We need to get 47. We're at 49. Can we get 47, please? I would love that. I would love that. We don't have to, though. Yeah. Trick or treating? Yeah, we're tricking out ES today. So. Anyway, who did I leave off? Jorks, critical pips. Short on Nasdaq was amazing. I haven't actually looked at Nasdaq in like the last 45 minutes. But I really liked ES more than I did NQ. And I'll talk about that as well. With what you proved, this should be 100. Oh, minimum any stream. That's okay. I'm not really a marketer. You know what I mean? I'm not really all that big into marketing, and I really don't do ads and stuff. Like, I really don't care about blowing up on YouTube. I really don't. I don't. Fernando took a lesson today? Ah, there you go. I like that verbiage there. Okay, we're at 48. We're at 48. We're creeping. We're just creeping slowly. But anyway, no, I haven't done the Shane. I haven't done the lesson today, Shane. And my impatience is kicking in, and so is this caffeine. We went to 47.50. Can we get 47 even, please? I need 47, and then my mind will be clear, baby. And then we can move on. 47 and a quarter. 47 even, baby. Let's go. All right. We're done. We are done. Gosh. Gosh, I'll show you that later. I'll show you that later. Okay. Cool. All right. So, I didn't take any notes. The lesson plan for today. I really don't want to do market maker models. If you want to, we can. But let me put it to you this way. Let me clip this too. One of the key elements to high probability trading, what was it that we went over yesterday in the Discord, right? Lee Bright went live on Discord, and then he was also live on, I think, Twitch and YouTube and something else. And he noticed I was in, right? I was watching. I was actually in the middle of eating. I had some nuggets, and he was like, "Oh, what do you think?" I'm like, "Well, I gotta finish my lunch first." But we started talking about the follow-up, right, on the dollar index and the euro. Okay, so what we'll go do is take a look at that. All right, higher time frame. And I said this yesterday in our market review. If you go back to the Tuesday market review in here, or even some of the live streams that we did on like the 20th and the 21st, we talked about how I was leaning bullish for these highs. And the problem is obviously the end of that week and even like this week, the daily time frame was horrendous. You know what I mean? And what I started to lose was the confidence and the timing of us getting to those highs. But still, the idea was we have highs up there. And the justification was what? Do you guys remember? The justification for those highs was the equivalent of the lows on euro. You remember that? Of course you guys do. Of course. But again, it just comes down to timing, right? Like, again, the market reviews are short. You can go back and watch them. And I think it was on that Tuesday the 21st, I was saying this might become an inversion and we're probably going to go for those lows. So, of course, now that we see it, right, does it become an inversion? Not really. It becomes reclaimed, but we don't actually get that. We trade back into that Sunday's gap. This would be a premium or maybe 50%, and then we get our run. So you see how easy that is? Wednesday's close should have told you everything. Seriously. Thursday's close should have told you what today was going to do. Would we get a reversal day on Friday? If Wednesday we close lower towards the lows, Thursday higher does not show any bullishness at all, gets slammed lower. Is that bullish? No. No, that's not bullish. So then today, what? The AMD concept, right? Or the PO3 concept, accumulation, manipulation, distribution. Are open, we trade higher to go lower, and it's still sinking. You see how that works? No, maybe you're not picking up what I'm putting down yet. All right, John, I kind of see what you're talking about. You mentioned the dollar index had those highs, and the equivalent of the highs on dollar index would be the lows on the euro. But what does that have to do with indices? I'm lost. It's not, I don't get it. Okay. If the dollar index, when it consolidates, indices can do whatever. Okay. However, when the dollar is bullish, okay, see that? Higher Wednesday, Thursday, higher. And then even with above those highs, what did I say yesterday? I don't think Lee Bright's in here today, but what did I say? We'd probably continue higher. But I thought equal lows or equal highs are supposed to be reversals. Wrong. You're wrong. I told you we would continue higher. I think we're going to continue higher because not every high or equal highs is a reversal. Okay? It's almost like I know what I'm talking about. So yes, today is higher, right? So with the continued bullishness on the dollar index, okay, the key here, one of the key elements to high probability trading is intermarket analysis. Intermarket analysis. John J. Murphy has books on this stuff. I don't think they're worth reading, no disrespect. It's just in the most basic first principle of intermarket analysis when it comes to the dollar index is if the dollar is strong, the indices can be what? Oh, look at that. Weak. You guys get me? Drop some twos in the chat if you guys are with me so far. If we have okay, we'll do the colors even though it looks horrible. I don't know why those default colors are like that. They just picked the absolute worst colors imaginable. But nonetheless, look at this. Wednesday, Thursday, Friday higher for the dollar index. Strong dollar. It doesn't mean that indices will go lower. It doesn't mean that. It means if they are bearish, meaning we have levels of liquidity or we have gaps or we have, you know, something to that effect, then now the intermarket basically is in alignment. Now we have high probability what? Shorts. Now we have high probability shorts on the table. Okay, I don't know if Lee Bright recorded his session or not, but what did I say yesterday? Anyone who's trying to buy the low, they're not having a good time. They're not having a good time. Stop doing that, right? Sometimes knowing when not to trade will save you from headache and losses too. Today, same thing. And I already know what happened. A lot of people today probably went, oh, we have equal highs. Let me long for those highs. Nope. That's wrong. That is wrong. If we do have equal highs, okay, what happens in here at 10:45? Let's drop down. What have I been telling you about original consolidations? What do we like to see at original consolidation? What do we like? When we have a original consolidation, what do we expect afterwards? Or what is one thing we can reasonably anticipate afterwards? We'll do top center. That looks pretty good. Yeah, that looks pretty good. Retracement. Price will leave the liquidity open. Leave it and trade back into it. And second accumulation. Okay, so technically you guys aren't wrong. What I was looking for is an original consolidation with equal highs. What we like to see is this right here. Usually not a second time, but again, I don't make the rules, okay? I don't control price as much as it looks like I do, okay? I know. Man, John, you're such an a-hole. Yeah, well, I'm pretty precise too. So anyway, what we like to see is us leave it, come back into it, and then leave it again. Checking in from Austin today. What's up, Jordan? I would, hold on. Jordan, you're in Austin? Dog, you have to go. You have to go to the Painted Porch. See how far? It should not be that far from you. The Painted Porch Bookshop. It's in Bastrop. And if you're in Austin, it should be an hour away at the most. That's Ryan Holiday's bookshop. You should check it out. If it's more than an hour, then I guess maybe don't go, but it should be close. It's like southeast of Austin. So, anyway. I forgot what I was even saying. What were we talking about? What we'd like to see is us get back into the consolidation and then leave it. When we leave it, that's how you know that it's going to be left open. And I know that sounds obvious, like, okay, well, yeah, once it goes lower, we know it's going to go lower. Yes, but you're not hearing me here. When we have that, okay, those are shorts, okay? You can short something like that. And I know a lot of people may not agree. That's okay. A lot of people aren't as precise as me either, and that's fine. But look, we trade up into these up candles. That can be a short. Now, where's your stop loss? To be fair, I don't know. It probably would be that high, and that's probably too big of a stop. So maybe we don't trade it. No worries. But at least we understand, okay, we go lower, retracement. Oh, this may be a reversal to go for those highs. Nope. Gives that up. Goes lower again. So now it has done what? It has creeped so far for Thursday's low. This entire thing has been a sell program. So we are going to be in a sell program until that low is taken out. You see that? This is exactly what I was referring to in my mind when I said you can short in a discount. Some people think you can't short in a discount, and that's because you don't understand price delivery. You don't understand price delivery. Look at this. We do trade higher, like I already said earlier, just above this high here, back into our opening range gap. And then we start to, we see a response a little bit. I was watching like the 5-minute time frame. So then that tells me what? What does that tell me? When we got those up candles here and then started going lower, that tells me, oh, redistribution. Okay, look at that. Look how specific that is. Look at this. Is that distribution? No, that's redistribution. Is that Wednesday's low? No, that's Thursday's low. Look at that. Redistribution for Thursday's low, or I'm not touching the indices today. Because if that was the low and we started trading higher, I wouldn't touch it. I'd be like, nah, this is garbage. So what happens? We trade lower with an imbalance on the way down there. That's a short. We get down here to 1150, like I already talked about. 1150 is here. See that? 1150 drags us lower. 12 o'clock, open of the new hour. We trade higher, and then immediately for Thursday's low. Do you see how that works, chat? Like, in all seriousness, do you see how that works? Do you see how I can be literally this precise in price action? And you can too. I'm not saying that I'm the GOAT. I'm not. But I'm saying, dog, if I can do it, you can do it. Seriously. How can you be more specific than this? We're in a redistribution for Thursday's low. That means we're going lower. So that means bearish concepts should be respected. And they are. Those are easy scalps right there. Okay? Even though we are in the discount end of the range. The range being, let's say, Thursday's low up to either, I guess we can go with the high then. We won't go with the equal highs. That's fine. Thursday's low up to our current high of day, right? If this is the range that we're working with, 50% is here, right? Pretty reasonable. Excuse me. Sorry, I gotta stop drinking so much carbonation. before the stream. That short here that I said earlier, that's in a premium. That's shortable, right? We trade above that high. We don't get back into the premium here. And then right there. Okay, we are in a discount, but that is still high probability. Why? Because look up here. That's why. The law that I created. Time and price and context. Those three things. Okay? Those three things right there. What time is it? Here? Or sorry. At 11:50, that's our 12 o'clock macro. We're at the right time. Do we have the right price? Well, right at 11:50, I would say no, but we just got done trading into an imbalance like a minute or two prior to that. Okay? And then the context is, I already gave it to you. I tweeted that out to the world for free and said, redistribution for Thursday's lower. I'm not touching it. So if this is a redistribution, we should go lower. But again, the biggest key here to wrap all this up so we don't make this YouTube video too long. If we have the dollar index on here, let me just scrunch this up a little bit. See that? If we have a bullish dollar, weakness in indices. You see that? Drop some threes if you guys get it now. We started just like we did earlier this week. We started on the daily time frame. We looked at it. We said, yo, euro's got some lows, dollar's got some highs. Wonderful. After we get out of consolidation, once we leave this consolidation, because trading inside consolidation is not fun for most people. And I can agree with that. Consolidations suck. You don't get continued moves. You get a lot of reversals. But when we get expansion, right? Expansion of the dollar index higher, then if we have weakness on the indices, that's going to be high probability shorts. Okay? Now, when these sort of stars align together, it does not do this every single day. It's not that lockstep. And I do want to make that a point. I know I've said that time and time again. Because this stuff is really cool, is it not? I mean, you can't deny how cool that is and how precise this stuff is. You can't deny that, right? However, I cannot look at this and do this. And I even told you 47 at the beginning of our stream here, which we nailed it, by the way. We went down to like 43 or 44. But I cannot do that 5 days out of the week, okay? If I tried, it wouldn't work. I would take losses. Because the point is for not just like, let's say good trading or average trading. The title is one of the key elements to high probability trading. That's it. Top-down analysis, intermarket with dollar index and the indices. And of course, currencies as well. So with the euro having those lows there, added that confluence to bullish dollar, potentially bearish indices. So if you tried the long indices today, you've been probably getting either break even or what did I just delete? No, watermark. You've probably been taking break evens or losses. But guess what? If you took shorts, you probably knocked out of the park today. Right. And that's how you do that. That is full, well, I wouldn't say full, but that is very close to a full multi-time frame, multi-asset analysis. And when that stuff aligns, this is what you get. And that's a good way to end that clip. Okay? It is very cool. That's why I teach it to you. Because this stuff is amazing. It really is. I did clip it. I clipped like 18 minutes. I got to cut out that part I told Jordan to go to the Painted Porch bookshop or workshop. Bookshop, whatever it's called. But anyway. That's it, man. Like, in all seriousness, that's it. Knowing when highs are going to be left open, getting in sync with bearish price delivery, getting in sync with bearish price delivery. And then guess what? We may not actually get a reversal here. We may not run those highs. And that's fine. In all seriousness, that's fine. We could keep going lower. But once you take one good trade, walk away. Just walk away. And it's Friday too. There's nothing else to be done for me. There's nothing else to be done here. Nothing. And that's a hard part for a lot of people too. Take your one good trade. Oh, look at that. So we could continue lower and we get a fat ass candle lower. I don't care. I'm not in anything here. But thank you, Jonathan. Gutierrez. Appreciate that. I don't come here to mess around, bro. I don't come here to just inflate my ego, maybe a little bit, but I don't come here to, you know, show off and use this as a funnel for some expensive course. We're not doing that, bro. We're not doing that. If you're going to be here, you're going to learn how to trade. You're going to learn where you're going to mess up. You're going to learn how to journal. You're going to learn intermarket analysis. You're going to learn market maker models. You're going to learn low risk, high probability trades. Okay. And that's listen, chat. Y'all don't know the half of it. Y'all don't know the half of it, dog. That imbalance right here. Look at that. If it's supposed to be bearish, right? And it shouldn't trade to the upper end, then that's a short. And guess what? If it shouldn't trade to the upper end, then that can be your stop loss. Right? 65 to 71. That's like 6 points. $300. Okay. Do we get a 1 to 3 out of that? There's your 1 to 3 right there. I told you 47. 1 to 3.4. Look at that. There it is. There's your 1 to 3. I have nothing else to say. I have nothing else to say. Learn. Okay. Learn algorithmic price delivery. That's how you do this stuff. Okay. I never learned how to do this in any other school or method of thought. There's no indicators here. There's no volume here. There's no nothing. Not the volume on the lower half or like on the bottom or on the right side. There's nothing here. There's nothing here. Just candlesticks. That's all. Candlesticks and boxes. That's it. Candlesticks and boxes and a couple lines. That's it. Again, no shade if you use indicators. It's just, I don't. Personal preference, personal opinion. 1 to 3 is better than 1 to 2. Well, mathematically, yeah, but here's what I think, okay? I think you should trade whatever you're comfortable with. I think you should trade whatever you're comfortable with. So, for example, if we just take everything off and kind of clean this up a little bit, we can go over some examples. Do you want to do that? Shane, there's nothing wrong with a 1 to 2. I think you cut profits a little bit too short at a 1 to 2. But what I will say is a 1 to 2, if you can be consistent with it, then 1 to 2 can be very, very, very good. And I talked about that in the how to pass a top step combine video. And I talked about that in the Judas model, the inversion model. 1 to 2. It's good for me. It's good for you. It's just a 1 to 2. You can grow an account and it'll be, you know, it'll be relatively steady. We did that in the coin flip exercise. But the issue that I have with only 1 to 2 is you never let profits run. So you never see that exponential growth in the account. And that's again, that's just my issue. So there's that. So let's talk about this for a minute. I'll give you an example. It's coming back to this imbalance, right? This imbalance here, in the direction of liquidity, part of a sell program. All right, you have different options here. Now, I'd rather focus on stops than entries, since that's like what we're talking about here. So imagine 68, 66. Okay. Now I told you a minute ago that the stop can go to the high end of this imbalance. I know a lot of people don't agree, and that's fine. But again, a lot of people don't understand price delivery either. A 1 to 2 is just under that low here. Right? Fine. Now, when you have a larger stop, obviously to get that 1 to 2, you need a larger profit target. You might have looked at this imbalance this up candle above this imbalance as maybe a propulsion, which is fine. You could say, oh, well, there's your up candle, took that short-term high. There's your shift in price delivery. So that's a short. And then maybe you thought, well, here's an up candle to go lower. The stop could be based on that propulsion. Meaning, okay, I'll allow price to come back into that, but I don't want it to trade to the high end of this. So then your stop could go here. Right? So again, when you widen your stop, there's nothing inherently wrong with that. But you're going to need a little bit of a larger reward to nail that 1 to 2. And if you really wanted to be closer to the safer side, even though there's no such thing as safety, there's always going to be risk. But if you were like, okay, if this is manipulation, then we definitely shouldn't trade to that high, then your stop can go up there. So it would have to go through the imbalance, it'd have to go through the propulsion, and it'd have to go through this up candle as well. It'd have to go through all that to get to your stop. And so that 1 to 2 obviously would be a lot lower, which in this case, it does meet. Right? So again, you have options here. You have whatever your entry is. You have the high end of the imbalance, you have this up candle here, you have this up candle, or maybe that high. You get me? Oh, that's a mitigation here too. I just noticed that. Right? $12 mitigation lower. Oh yeah, that's nasty. That's nasty. We were talking about risk reward, right? Let's come back to the tighter stop. I told you this was a 1 to 2, right? Like just under that low. However, Thursday's low is here. And then on top of that, right? Oh, watch this. I haven't brought this out in a long time. Do you guys remember what we did with daily highs and daily lows for ES? Do you remember? What can we do? We can take that level and drop 5, 10, and 15, right? So what's 51 minus 5? I don't know. 46? Is that right? Quick math for you. Close enough. Right, so 51 minus 5 is 46, right? Boom. See that? But anyway, my point is a 1 to 2 here, that would have been fine. But if you had held for Thursday's low, that's almost a 1 to 3. And then if you held for 47, which I gave you at the beginning of the stream, that's a 1 to 3.6. So that's exactly what I'm talking about. By cutting that trade so short, yes, it's good in the aspect that it grows the account. No problem there. It's just at no point do you ever let a trade actually run. You know, you see what I'm saying? Oh, we make 100 here, 100 here, 100 here. Okay, no problem. But you never hold for, let's say, 300 or 400 on like a runner or something. That's my point. But as long as your account is green, then it's hard to argue that. You know what I mean? Like if you love 1 to 2s and you're profitable with it, then there's really no need for an argument. If you're doing well, then don't fix what isn't broken. You know what I mean? It's just the way that I think and the way that I do things. I can't sit there and only take 1 to 2s because, like, let's say this was our low risk buy. I don't think it is. Maybe it is. I don't know. But let's just, for example's sake, because this is what we're talking about here. You like it and you're like, hey, you know, this retracement here, you know, stop at that low and I'm going to go for a 1 to 2. Okay, fine. But if you don't hold for those equal highs, if it does end up being a buy model or even like equities open high, that's a 1 to 6 or even a 1 to 7, which a lot of people think, oh man, that's high or it's a scam. No, you just don't know how to trade. I know that sounds mean. You don't understand price delivery. You don't understand market maker models. You don't understand liquidity. Holding low risk buys of a market maker buy model for the terminus of the original consolidation, that's how you get nice high RR setups. So Shane, I'll put it to you this way. Let's say, just for example's sake, you longed 4 contracts. Okay, cool. Then wherever your 1 to 2 is at, get out 3. Just get out 3 and then hold 1 for maybe up here. Right? For that final equal high. And what you'll notice is you might take, let's say, 3 contracts off at 15 points. But 1 contract may run for 50 points. So guess what? That 1 contract would outdo the profit on those original 3. Because 3 contracts at 15 points is 45 points of 1 contract. If you held for 50 or 55, that 1 runner will outdo the profit of this. You see what I'm saying? Does that get your gears turning a little bit? Does that turn some light bulbs on for anybody? Now, it won't always happen that way. It won't always happen that way. You'll get out 3 and then it'll come back to your break even. It's not advice, Shane, just so we're all clear on that. But if you get out 3 and then you get out break even on the 1, you can't be mad about that. Oh, this sucked. This is stupid. I could have got out all 4. Yeah, you could have. But what you're looking for and what you're trying to argue for is perfection, and I can't give you that. We can see perfection in price delivery, 100%. We can take perfect trades. You've seen it. But I do not promise you that. By taking profit, or partials rather, by taking partials and holding 1 for a later target, it's the best of both worlds. If it comes out and gets you break even on that 1 contract, you've already profited 3. Who cares? If you take profit on the 3 and then you get that 1 runner up here, you might think, well, damn, I should have held all 4 for those highs. No. Because the other side could be true. Maybe you wanted to hold all 4 and you had a chance to profit and then you said, nah, I'm good on that. And then it comes out and break you even. You see what I'm saying? So that's why partials and holding a runner is the midpoint. It's the best of both worlds. By holding 1, you capture the entire move on a partial. Better than no partial. And we take partials or take profits because we want to grow the account. That's the whole point. You get me? So that's what I think. So whether you like 1 to 2 RR or 1 to 3 or, you know, like really high 1 to 10s, I'm not going to, it would be ill-advised if I said, oh yeah, only go for 1 to 10s. Only take low risk buy and hold for, you know, for that. That would be really bad. That would be bad. Okay? There's a lot of people out here who are giving out bad stuff, and I don't want to be one of those people. Okay? I do not want to be one of those people. So we're at our 1 p.m. macro now. This might end up trading back into the range. I think it also depends on how much volatility we get here in the PM session, if as much as I want to press buttons, if we do this, I'm going to challenge myself to some serious discipline here. But if we do end up coming back into a premium and then our final hour is like in the upper half of this, we're probably going to run for these for those equal highs and maybe a new high of day. We may do that in here, but I'm not going to do it. I'm not going to do it. The weather the last couple of days has been so phenomenal, bro. Like windows down, top off, possibly. I had to do it manually. I don't have the button one. You know, I want to do that, if that makes sense. But I at least want to, I always teach with live price. I at least want to be able to give you something to watch for a potential, you know, idea, right? Original consolidation, distribution, redistribution, manipulation. This might be the low risk buy. So we may get first stage accumulation here and then just test it. Don't trade it. Just do a study. See if that does become, if that distribution does become accumulation or maybe a reaccumulation to go higher. But remember, it is Friday. Okay. It's the last day of the month, by the way, too. So there is that. There might be some portfolio rebalancing and stuff from big money, you know. I don't know. But what I do know is you can learn how to do this if you focus, if you take notes, if you journal, if you study. Okay, you will be able to learn how to do this. He said, must have been nice. I've been freezing up here. I mean, in the morning, it's been like high 40s, low 50s. But by the time the afternoon rolls around, like right now, it's like probably 60s. So it's a little chilly, but enough to crack the windows or have the windows down. So, yeah. But anyway, I feel like you guys got a lot of sauce today. Did you guys get some sauce today? Drop some 4s in the chat if you guys had a good time today. We got 52 viewers, only 17 likes. Wow. See, worst mentor on YouTube. I told you. I told you. Nobody ever likes to stream, dog. It's the ego, I know. It's those tweets. Man, I wish I could do that. Don't be jealous, chat. I've been doing this a lot longer than you. It's okay. There are plenty of people who have been doing it longer than me too. But I'm trying to get you up to speed, all right? I'm trying to get you to the good stuff, okay? So with that, we'll cut it early here. With that, y'all be good, be blessed, have a good weekend, all right? Read a book. Do something nice for somebody. Park in the back of the parking lot. Return the shopping cart. Did you guys ever do that challenge, by the way? Before we hop off here, did you guys ever do that challenge? Did y'all ever park? Did y'all ever do that challenge where you parked in the back in the second half of the parking lot? Or did you guys skip out on that? Because I told you a lot of you wouldn't do it. And I really want to be wrong on that. MJ did. See, how you do one thing is how you do everything, chat. If you can't do the little things, you won't be able to do the big things. I think it was Jim Rohn who said that. If you're too big for the little things, you'll be too little for the big things, or something like that. I even put a cart back when I saw one. Look at that. Mason, yep, blocked. Blocked forever. All right. Y'all be good. Have a good weekend. See you Monday. I don't even have an outro song ready.
Если бы слезы твои были водой, ты уже напоила ею весь мир. Милая, но в жизни есть не только боль. Сможешь сиять еще ярче звезды.